Hi, I'm Hafiz and I'm going to take you through to another ACCA F5 exam area which is called as CVP analysis, cost, volume, profit analysis. So let's get started. Right, cost, volume, profit analysis, or alternatively called as break-even analysis. Idea is, as far as the profit is concerned, generation of profit depends upon a host of reasons and a number of factors. Sometimes profit is affected by cost, and a number of times profit is affected by the volumes. So the accountants try to investigate a relationship between cost and volume and their effect on the profits. Now remember the idea of the cost, that costs are of various types. Some costs are variable, some costs are fixed. Now what happens if the variable cost goes up or down? Meaning to say, variable cost in total increases or variable cost in total decreases. What is the likely impact on the profit? Well, I can see you are telling me no impact, simply because as the volume goes up, variable cost goes up. But as the volume and variable cost go up, at the same time revenue goes up as well. Okay? What about the fixed cost? Well, when the volume increases, what happens to the fixed cost? Generally, fixed cost stays the same. And what happens if the volume decreases or volume goes down? Well, the same answer. Fixed cost stays the same. So, in using marginal costing, okay, if you remember the marginal costing in decision making, using marginal costing, we find out very suitable relationship between the level of activity, costs and revenues. That if we increase our volume of activity or number of units, because the fixed cost stays the same, so the profitability increases. Right? It's a very useful technique which uses the cost behavior to identify the level of activity at which we have no profit or loss or break-even point, and that gives us a point of survival. So it's a very useful technique to give management some idea that what level of sales we need to achieve for this period in order to break even. At least salaries of the people have been paid, suppliers have been paid for, all the rent, rates, advertising or other expenses have been paid off. So long as everything has been paid off, even we didn't make any profit at break even, the organization will survive. Okay, so let's have a look at some of the usefulness or benefits of CVP, break-even analysis. It helps us to find out break-even point, which we are going to look at, the point of survival in single product environment and multiple product environment, how to determine it. Then to find risk level in sales plans through the margin of safety. Okay, so very soon we are going to have a look at how with the help of margin of safety we can determine the risk level of sales plan, that our sales are risky or sales are less risky. Allocation of resources in order of priority or constraint. So whenever organizations face or struggle with the acquisition of resources, then CVP analysis also helps us to prioritize our resources. Okay, should we allocate resources equally to all products, or should we allocate resources in order of ranking? Okay, and last but not the least, to determine sales plan. So this is something about your syllabus, and then at the end of the session we are going to look at some graphs and charts as well. Okay, here is single product environment. When the company or organization sells only one product, then how a number of ideas can be developed. Okay, break-even point, margin of safety, target volumes. Break-even point is simply how many units company should sell to break even. Okay, margin of safety indicates by how much sales can decrease before a loss occurs. Now, idea of margin of safety is this. Let me actually give you a thought. Let's think about two candidates going into any ACCA exam. Okay, for example, student A and student B. We know that total marks of any ACCA paper are 100 marks in every exam. For example, F5. Candidate A attempts 4 out of 5 questions and candidate B attempts 5 out of 5 questions. What do you think? Who is more likely at risk of failing the exam? The student who has solved all 5 questions or the student who has solved only 4 questions? I'm not talking about the qualitative aspect of the answers. That student A might have answered less but better answers, but I'm not talking about, I don't know about their scripts. So I'm just trying to judge the book by its title. Okay, that one candidate has answered 4 questions and another candidate answered 5 out of 5 questions. Looks like that candidate A is more at risk. This type of idea we will apply in determining the level of sales as well. That when the sales plans are given by the sales managers, okay, we try to see that if their sales plans from their original budget drop by due to any reason, increased competition or economic situations or any local laws or weather effects, if the original sales plans drop by, okay, of course if the sales will decrease, our profit will decrease. And if the sales keep on decreasing, we may enter a loss area. So the question is, by how much original sales may decrease before we hit the loss area, and that's called as margin of safety. We will see it through a formula as well. Target volumes. Target volumes are simply the number of units the organization need to sell in order to not only recover the break-even volume, but also some target profits. Okay, because in a number of cases it happens that the company has signed agreements with the banks and they need to pay off their interest, or the company's directors are in pressure to pay off dividends to the shareholders. So the management needs to generate some minimum return for a number of reasons. Okay, and because of this they want to make some profit. So target volumes will simply be the number of units in order to break even plus to generate some profit. We will see as well. Okay. Now here is a very useful ratio which we are going to use here, which is called as contribution to sales ratio. Okay, or as it says CS ratio. Okay, which is contribution divided by sales or contribution divided by selling price. The idea of contribution to sales ratio or CS ratio is simply how much contribution is generated from a given level of sales. That if we sell product A for $100, how much contribution would be generated from this $100? Okay, and I think everybody knows the meaning of contribution already. Contribution is simply selling price less variable cost. Okay, so we try to identify the contribution generating potential of individual products. Which product has got more contribution potential and which product has got less contribution generating potential. And later on we will use the CS ratio in a multiple and product environment to rank the products. Through the contribution we will rank the products whether A generates more or B generates more. Okay, so these are some of the formulae which are usually not given in the exams, so you have to remember them. Okay, you need to know the meanings of unit contribution, selling price minus variable cost. Total contribution is contribution per unit times by the volume. Break even point, which is a very simple formula, fixed costs divided by unit contribution or contribution per unit. Now remember one thing, when it is fixed cost, it is not fixed cost per unit, Even if it's given fixed cost per unit, please convert them into total fixed costs for the period. So total fixed costs divided by contribution per unit. Here is margin of safety, which is budgeted sales minus break-even sales divided by budgeted sales. Sometimes instead of budgeted sales, examiners call that as total sales. So total or budgeted sales minus break-even sales divided by the total or budgeted sales into 100. And what we believe is greater the better. Meaning 40% margin of safety is better than 30% margin of safety. Meaning 40% drop in sales will hit the loss area and 30% drop in sales will hit the loss area. Okay, so wider the margin of safety or cushion of safety, better or secure the sales plans. Contribution target fixed cost. So these formulae, they were actually used in paper F2 as well. Okay, so that's like a little review. Okay, target volume contribution target divided by unit contribution. CS ratio, as the name says, C divided by S. It can be total contribution divided by sales revenue, or if the data is individually given per unit, then unit contribution divided by unit selling price. And if we are required to calculate the break-even sales revenue, which normally occurs in a multiple environment in F5. Break-even sales revenue equals to fixed cost in total again divided by CS ratio, and that formula gives us the break-even point in revenue or in money value. Okay, now let's use some of these with the help of first example. Okay, and then we will extend it to main F5 syllabus, which is about multiple product environment. So here is an example called single product limited. You can see it. Here are the requirements. Okay, very brief requirements. So what I expect from this type of question, this type of example, a very likely question for section A. Then when you are given little requirements and 2-3 minutes, job done. Okay, A, calculate the following. Number 1, break even point in units, then margin of safety, and then CS ratio of the product Z. We will see very simple formulas in a minute. And B is, if the company wants profits to increase to $250,000, calculate how many units would need to be produced and sold to achieve this target. Now you got to read the question very, very carefully. Okay, this part is taken from one of the past exam papers. A number of people actually read it in this way, that if the company wants to increase profits by $250,000, it's not by $250,000. If the company wants to increase the profits to $250,000, calculate how many units would need to be produced. Okay, meaning to say, if break even is no profit, no loss. Is it now okay? Break even point is no profit, no loss. So in other words, profit is 0. So from 0, if the company wants to increase profits to $250,000, okay, how many units we need to sell, not only to achieve break even, but also to generate this $250,000 profit. So reading the requirements very, very slowly, carefully, okay, makes our life much more comfortable in solving the questions. So here is the information. A company produces and sells one product, Z. The following budgeted information is available. Selling price per unit given, variable cost per unit given, contribution selling price minus variable cost equals to the contribution. Then fixed costs are already given in total, budgeted sales volumes and budgeted profits are given. Okay, is that right? Now let's have a look at requirements one by one. First of all, break even point in units. Requirement A part 1, break even volume. So just to remind ourselves, yes, these formulas will not be given in the exams. So by writing them couple of times, by practicing the questions, okay, you will be able to remember them. Okay, so formula is total fixed costs divided by contribution per unit. Okay, now we need to pick up the figures. You remember the fixed costs were given in total $200,000 and the contribution per unit is also given. So $200,000 divided by contribution per unit. I think you know the answer. $10,000 units. Okay, now we are looking at the second part. So do you know the meaning of this 10,000? Meaning if this company sells 10,000 units, they will end up at a break even, meaning they will have no profit, no loss. Or in other words, by selling 10,000 units, total revenue will equal to total costs. You can check, you will get the same answer. Total revenue equals to total costs. Second requirement is margin of safety. Okay, so first of all, reminding ourselves with the formula for the margin of safety. You got to be careful in exams. Sometime margin of safety is given as a percentage in the exams. So you need to see the options, option A, option B, C, D, okay? If examiner is giving you answers expressed in percentages, it simply means you are applying the formula which I'm going to write down. If examiner has asked you to calculate margin of safety in units, okay, then it will be slightly different. So I will tell you, actually I can tell you all of them. Margin of safety in units. If it is in units, then it is budgeted sales in units minus break even sales in units, and margin of safety is done. If examiner asks you to calculate margin of safety in money or dollars, instead of using units, budgeted sales in dollars minus break even sales in dollars, and margin of safety is done. And slightly more technical, if examiner has asked you to calculate margin of safety expressed as a percentage, then please use this formula, which is called as margin of safety ratio as well. Which is budgeted sales minus break even sales divided by budgeted sales again, and just to express the answer as a percentage times by 100. Okay, in this formula, budgeted sales or break even sales can both be taken in units and can both be taken in dollars. If you are using dollars, then just use dollars in this formula. If you are using units, then just use units, whatever information is available. So by looking at the data, actually the information was available in volumes. Okay, remember budgeted volumes of sale was given, which was 15,000 units. Okay, minus break even sales we have just calculated a couple of minutes ago, 10,000 units, and then divided by 15,000 units again, times by 100, and here is my calculator. and I get approximately 33.33%. Meaning is this, that if our original sales plans drop by 33.33% due to any internal or external factors, we will enter the loss region. We will hit the break even, and more drop in sales, we will be making more and more losses. So the maximum reduction in sales this company can afford for this period is 33.33%, not more than that. And now remember my example which I was giving you, a Mickey Mouse example about two students. A has answered 4 out of 5 questions and B has answered 5 out of 5 questions. Okay, meaning to say is, if total marks are 100 for both of them, okay, but if A has answered 80 marks questions and B has answered 100 marks questions, break even is exactly the same for both of them. So you see here that if the marks of A drop by 30, A will hit the break even. But if the marks of A drop by 31, A will fail. But B has a wider cushion of safety, that if the original attempted marks of B drop from 100 to 50 by 50, B will still pass the paper. And if 51 marks go down, then B may fail. But B has slightly wider margin of security. Okay, and that's the meaning of margin of safety. Greater the margin of safety, lower the risk in sales plans. Is that okay? Now here is the third part of requirement A, which is calculate CS ratio. Actually better to write down or remember for the exam purposes in this way: contribution to sales ratio, or C/S ratio. By the way, it's also called as profit volume ratio. So please don't be surprised if you are given the name of CS ratio as PV or profit volume ratio in the exams. It's the same meaning. CS ratio is simply contribution divided by sales. Okay, if contribution is given per unit, then take sales per unit as well. If contribution is given in total value, then denominator should be total sales. So it depends whether information is available per unit or information is available in total. Now if you remember, both selling prices and contributions were given per unit. Okay, contribution is 20 divided by selling price 50. And we get 40%. And please remember about CS ratio of any product as well. Greater the better. A product with 40% CS ratio will generate higher contribution as compared to a product with 30% CS ratio, which will generate less contribution from the product. Okay, so higher the CS ratio, more profitable the product is. Now this was the requirement 3. Now here is part B. Examiner has asked us to calculate target volumes. Target volumes to earn a profit of 250,000. Now the formula of the target volume is very much similar to break even. Only difference is this: total fixed costs plus target profit divided by contribution per unit. So only the change is this addition of profit. Everything else is exactly the same. Okay. Let's put the numbers down. Fixed cost in total was $200,000. Target profits are 250,000 and contribution per unit 20. Okay, so here we go, 200,000 plus 250,000, 450,000 divided by 20, which is 22,000. $500 units. If company sells a total of 22,500 units, company will not only achieve the break-even, company will achieve the break-even, and after the break-even, they will also make a profit of $250,000 as well. So that's sort of things you might have noticed now. I think a number of people have got the idea through applications. When we are applying these principles or these concepts, okay, you might have noticed, is it not helping us to develop better plans, better sales strategies? Okay, is it not giving us different type of challenges, okay, that top management can expect from the sales teams, okay, or production teams, what they should be doing over the next period? Okay, first challenge for the production and sales teams to produce sufficient units to survive, and second challenge for the production and sales departments to produce more and sell more in order to earn more profits. So when these type of benchmarks or standards or targets are introduced within the organization, the aim still remains the same, to improve the performance of the organization. Okay, now let's have a look at some charts, basic charts. Okay, right, break-even chart to start with, which is very simple. You've seen it already probably in F2, so maybe 5 minutes of review will be sufficient. X-axis represents budgeted activity, okay, and Y-axis represents costs and revenues. First of all, we can draw a fixed cost line, all right, or you can draw any line, actually, to be completely your choice. Okay, you can actually start with sales line. Okay, let me show you everything from scratch. Okay, let's say this is the y-axis and here is the x-axis. Okay, so here is the budgeted volume, here is the costs, and revenues. Okay, first of all, let's suppose you can start with sales line. Okay, now this is an imaginary sales line. Okay, now please do not think this is a real sales line. It's an imaginary sales line of any product. I just wanted to show you how sales line looks like, meaning to say it starts from here, the base 0, okay, meaning no volume, no sales, and as the volume increases, sales value increases, okay, sales revenue increases. So just wanted to show you this relationship between the volume and sales. Now here is fixed cost. I suppose everybody knows fixed cost is like this. Okay, now here is the variable cost line. Variable cost. I think everything is okay. The only problem is this: we are drawing a break-even chart. And the question arises, where is the break even? Break even is where the total sales revenue equals total cost. And where does it show on the break even chart? I can't see it. Okay, so what we do is a little trick. Instead of drawing a separate variable cost line from the base, what we do is we superimpose the same slope of variable cost line on top of the fixed cost line. Okay, and this becomes total cost. This becomes total cost. Okay, so it remains the same in gradient, okay, but we put it on top of the fixed cost, so it still does not disturb the variable cost relationship. You can see here that if there is no volume, there is no variable cost. There is fixed cost but no variable cost. Okay, now wherever the sales line touches the total cost line, that point is called as break even. Okay, that point is called as break even. It's a very useful chart to show it to various managers within the organization, okay, financial or non-financial managers, and they get quite better understanding from this chart, which you can see this diagram on the screen. Okay, now there are many limitations, but I'm discussing what is part of the syllabus. The main issue about this break-even chart, no doubt it gives us very useful information, but one information it does not give us. We know that if we will sell more than break-even, we will generate profit. And if we will sell less than break-even, we will make a loss. This is what we are very clear about. The only one thing we don't know from this chart, that if we sell more than break-even, how much profit in dollars will be generated, and if we sell below the break-even, how much loss the organization will suffer in dollars. Okay, so if we want to present that in this information, the amount of profit or loss on the chart as well, we need to develop another chart which is called as profit volume chart. Examiners call it PV chart. Okay, profit volume chart is actually a dissection of the original break-even chart. If we look at the original break-even chart, can you see where is the break-even? And right from the break-even, we start a new x-axis. It works like this. Okay, wherever is the break-even, right through the break-even, we develop a new revised x-axis. And what happens, wherever the x-axis now touches the y-axis, you can see there is some of the y-axis above this x, and there is some y-axis below this x-axis. Okay, and that becomes the foundation or starting point for the profit volume chart. So what we do is, this horizontal line becomes our new x-axis, and that goes through the break-even chart. So because it goes through the break-even point, it is called as sales or revenue at break-even. That break-even can be anywhere on this line. Okay, so remember at break-even, how much profit do we earn? Please answer my question while I'm drawing the y-axis. Oh yes, I heard you screaming at me that at break-even there is no profit, no loss. Okay, so y-axis is actually now redefined as profit above x and loss below x, and wherever x intersects y, profit or loss is 0. That becomes the foundation for the profit volume charts. Okay, and then we will see some lines with the help of a proper question. Okay, so this was understanding about the profit volume chart. Now here is the CVP in a multi-product environment. Okay, there are a number of things we are going to understand in here. Okay, few things which you have learned already and little change to them. We have seen in this session how do we calculate the break-even point. So here is break-even for multi-products. 2, 3, 4 products. Okay, generally based upon the marks allocated in exams, 2 to 3 products max can be given in exams. So in a multiple product environment, here will be some revisions to our original formulas. Okay, first of all, break even revenue. Break even revenue in dollars. That would be like this: total fixed costs divided by weighted average CS ratio. Total fixed costs divided by weighted average CS ratio. Generally we use just CS ratio for the break-even revenue for single product. So if it's only single product, then the formula, as you've seen before in this session to start with, which was total fixed cost divided by CS ratio. But if it's a multiple product environment, company is selling 2, 3, 4 products at the same time, then total fixed cost divided by the combined CS ratio of all products, or weighted average CS ratio of all products. Is it okay? I can tell you there are a number of ways to calculate weighted average CS ratio. Here is the easier one. Okay, so weighted average CS ratio. Okay, right, remember what is CS ratio? Of course we've seen it, we calculated it as well, which is C divided by S. So here is contribution divided by sales. Remember, this was originally the contribution to sales ratio. Now let's make it weighted average. In order to make weighted average, as I said, there are so many other mathematical ways as well. Here is a simple one. You just need to add one word on top and bottom, which is total, and it becomes total contribution divided by total sales from all products. Total contribution divided by total sales from all products. Okay, and then a number of additional things we can learn from the example, and then we can draw the profit volume chart as well. Let's have a look. Example, CVP Limited. CVP Limited is investigating the risks attached to sales plans and profit levels. The management of the company feels that they are always struggling to create a realistic sales plan which should add to the value of CVP and its shareholders. Recently, there have been production problems reported by the production director in plant utilization, which have alerted the board. So they were having some problems in plant utilization, okay, probably capacities or breakdowns, etc. Now they are not sure whether to allocate resources to all their products equally, which they have done in the past, or to produce and sell products in preference to each other. Meaning, if they are producing 3 products, in the past they were allocating resources equally, meaning if they had one machine, okay, some time was given to A, some time was given to B, some time was given to C equally. But now they are thinking, Should we keep doing the same thing, allocate our resources to all products, think all products are equal or similar or equal in importance, or should we allocate resources in preference to each other, to products in preference to each other, meaning that A may be better than B, selling product C may be better than selling product A, something like this. Okay, we will see to this. Following are the extracts from last year's budgeted sales results, budgeted results relating to 3 products. So here are the budgeted results for 3 products. Selling price is given, variable costs given, fixed cost per unit given, profit per unit given. Hold on a moment. Here we are given fixed cost per unit. Okay, and remember we've seen the formula for the break even, and many times I was repeating, in the break even we don't need fixed cost per unit. What we need is fixed cost in total. Reason being, fixed cost is never incurred on each product per unit. Fixed cost like rent, we never pay rent on a product per unit basis. We pay rent for a whole month, whole quarter, or a whole year. Okay. Then budgeted sales volumes are given. Requirement is calculate the budgeted profit. Okay, I don't know, for some reason they asked us to calculate budgeted profit for 2 marks, maybe just to test if we can calculate basic profits or not. Well, it's only for 2 marks, and I don't think the students should be developing a very long income statement just for 2 marks, okay, because of the marks allocated. What we are given here is profit per unit is given, and in order to calculate the total profit, we just need to multiply that by the budgeted sales volume and we will get the budgeted profit. Okay, for 1 unit is given, and when we multiply that by the budgeted level of sales, budgeted units, we will simply get total profit or budgeted profit. So here is the example CVP. Okay. Now there are 3 products: pens, numbs and needles. And here I'm answering requirement A, which is the budgeted profit. Okay, so the profits of 3 products are given, just need to pull them out, 6, 3 and 1. And multiplied it by the volumes 2000, 3000, 2000 and 1000. And for 2 marks, that's the maximum I can do, and you should be doing in exams as well. Okay. Here we go. 18 plus 6 plus 1. In total, $25,000 profit. Is that okay? So just to warm us up, examiner had given us this little Mickey Mouse example, requirement A. Now more exciting stuff is coming now, okay? Requirement B, determine the break-even revenue and margin of safety if the company sells all products as per their original sales plans. Remember what were original sales plans? That company was selling all products together. Company was allocating their resources equally to all products and they were selling all products together. Means if customer was coming for pens, they were handing over pens. If customer was coming for needles, they were selling needles. Just like, you know, the supermarkets or different shops. Okay, what these shops do, they display all products they have, and then the choice of the customer whether they want milk or bread or eggs or anything else. Okay, now here is the break-even revenue and margin of safety. First of all, break-even. I know you remember the formula. Let me remind myself, and by repetition we will all learn. Remember, okay? Break-even revenue. Total fixed costs divided by weighted average CS ratio. This is okay? Let's do things one by one. First of all, let's have a look at the numerator, which is total fixed costs. If I go back to the question, here is the fixed cost given, but not given in total. It is given per unit. And can we multiply that by the budgeted volume, and we will get the fixed cost in total? So 2, 3 and 6. Here is the total fixed costs. 2 times 3,000 plus 3 into 2,000 and plus 6 into 1,000, and in total 6 plus 6 plus 6, $18,000. In total $18,000. Okay. Now we are looking at the denominator, which is the weighted average C over S ratio. Okay. Weighted average C over S ratio. So remember, C is contribution, and meaning of S is sales. So total contribution divided by total sales from all products makes up weighted average CS ratio. Let's pick numbers one by one. First of all, total contribution. If we go back into the data, remember contribution, sales minus variable cost. So here is sales minus variable cost. So 12 minus 4 is 8, 14 minus 8 is 6, and 9 minus 2 is 7. Okay, so 8, 6 and 7 contribution from each product. Okay, so I'm calculating and writing everything for you like you would be doing it in exams step by step. Okay, so 8 into 3,000 units plus 6 into 2,000 units plus 7 into 1,000 units. That gives us total contribution for all three products. So 8 times 3, 24,000 plus 12 plus 7, in total $43,000. That's the total contribution. And total sales is another easy thing to find out. Selling prices are given for each product. We just need to multiply them by the sales volume. Okay, so 12, 14 and 9. Into 3,000, 14 into 2,000 plus 9 into 1,000, and here is the total sales. 36 from the first, 28 from the second and 9 from the third, in total $73,000. Okay. And here is the weighted average CS ratio. Total contribution divided by total sales. Okay. And I get 0.589. If you fancy multiplying this by 100, you will get 58.9%. 0.589 simply reflects 58.9%. Okay, now all I need to do is look at the formula for the break even, which is total fixed costs divided by weighted average CS ratio equals to the break even revenue. Total fixed costs, so here is the break even revenue. Total fixed costs are $18,000 and weighted average CS ratio was 0.589. Okay, so 18,000 over 0.589 equals to 30,560. $30,560. Okay, job done. Now we are looking at second part of requirement B, which is margin of safety. Margin of safety, as remember, total sales minus break even sales divided by total sales again, and if you want to multiply by 100, you will get your answer expressed as a percentage. Okay, all numbers are there, you just need to insert numbers into this formula. For example, total sales we know 73,000. Break even sales we know just above 30,560, we just calculated, and divided by $73,000 of total sales. So 73,000 minus 30,560 divided by 73,000, we get 0.581 or 58.1% approximately. Okay, 0.581 or 58.1% approximately, meaning if the original sales plans or original sales volume drops by 58.1%, we will still be okay because we will in the break even. But if our sales, original sales decrease by 58.2%, we will start making loss. Okay, here is the next requirement, which is requirement C. Advise the company of an alternative plan if management wishes to produce and sell products in preference to each other. Remember, it's all about the usefulness of CVP analysis, which I started with. That CVP analysis can be used to determine break-even point, margin of safety, allocation of resources, and then to determine which product is better than the other, etc. Okay, the same idea is being applied in this example as well, covering full syllabus. Advise the company of an alternative plan if management wishes to produce and sell products in preference to each other. Meaning, if company doesn't know whether pins are better than nums, nums are better than needles, or the other way around, and management wants to know how can we determine a ranking order, how can we consider A has better priority than B, etc. So here is the requirement C to determine a ranking list or ranking order by using CVP. Very simple. All you need to do is, number one, calculate CS ratio for each product. Okay, very simple. Calculate individual CS ratio for each product. This time not combined or weighted average, but for individual product. Like this. There are 3 products: pins, nums, and needles. Okay, and we know that we've seen the contribution and all data of 3 products anyway. Okay, so 8 divided by selling price, sorry I forgot, 12. Second is 6 divided by 14, and third is 7 divided by 9. Excuse me, all I'm doing is contribution of each product divided by selling price of each product, and that's CS ratio. So for pins, 8 over 12, which is approximately 0.67, okay, rounded off. Second one is 6 over 14, which is 0.43 approximately, and then 7 over 9 for the third, 0.78 approximately. And on the basis of this, you can determine ranking order just in front of them. Remember the idea, greater the better. So highest CS ratio product will be ranked as first, and then second best will be pins, and third best will be nums. So meaning to say is, if company wants to determine a new sales strategy, company should be selling first of all needles. After the sales of needle has been achieved, then the pins should be sold over to the customers, and once the pins have been sold, then company should start thinking about producing and selling nums. Okay, so this ranking should be followed. Here is the last requirement, which is the most challenging one: drawing the graphs. Okay, I mean, on computers it's very easy because we know the data, and then we put the data and ranges and so on. All the spreadsheets draw charts for us. Okay, but here we need to do the charts or graphs manually. Okay, so using the same graph, requirement 1, plot a profit volume chart when all products are produced and sold together in their original ratio, meaning when pins, nums and needles were sold as per original plan. And number 2, using the same graph, plot a profit volume chart when products are made and sold using an alternative plan determined in part C. Okay, remember in part C we determined alternative plan on the basis of ranking. Okay, this is we need to draw. Note, your graph should be clearly drawn with all points shown and labeled. Okay, labeling is very important in the graphs, whether this one, linear programming, etc. Okay, now there are some preliminary calculations you need to keep in mind. Okay, you've done it, most of them. You need to pull the numbers out. Okay, so I can give you a list of things which you need to keep in mind before you start constructing your chart. Okay, first of all, we need to know the ranking order. You've done everything, you don't need to develop more calculations. Okay, right, you can pull out numbers, or using calculators you can merge things anyway. Okay, most of things have been calculated already. Ranking order, so here I can give a heading. Okay, things to know before we draw profit volume chart or profit volume graph. Okay, these are the things, or these are the numbers we need to know, data we need to know in order to draw the chart. Number 1, ranking order of the products. Number 2, we need to know break-even revenue. Number 3, we need to know just one moment, cumulative sales. On ranking order. And fourthly, we need to know cumulative profit or loss on ranking basis. Okay, these, if you can pull out four figures, okay, a number of numbers, but these four things from the data, you can easily construct a profit volume chart. Okay, so let's have a look at ranking order is known to us. Break even revenue we have calculated. Cumulative sale, I mean, we know total sales $73,000, but on ranking basis, how can we pull them out? If I can take you back to the data, remember total sales were calculated. So if you just bear with me, it's like this. Total sales. Remember what was the ranking? I forgot myself. Ranking was needles, pins and numbs. Okay, meaning sales of needles will be made first of all. Okay, then here is pins number 2, and then here is nums number 3. So cumulative revenue will be generated in this way: 9,000 plus 36,000 and then plus 28,000. That would make up total sales. If we are not selling all products at the same time, we are selling product by product. So the first revenue will come from here. Then on top of this, second revenue will be generated from here. And right at the end, the last revenue will be generated from third product. Okay. So please remember these ideas. And last but not the least, cumulative profit or loss on ranking basis. Now I know the cumulative profit already. Remember, requirement A was total profits. I think it was $25,000. If I go back, first requirement was calculate the profit. I know total profits, but we need to know the cumulative profits on ranking basis. Okay, on ranking order. Now this is the way we calculate cumulative profit on ranking basis. Because if you don't have these calculations or these numbers, you would find it almost impossible to draw profit volume charts. So these four things which I was talking about must be there. Here are the cumulative profits on ranking basis. Remember, the first ranking product is needles. Right, here is the profit from needles. First of all, needles contribution. Okay, remember the contribution we calculated already, we just need to pull it out. Okay, contribution 7,000. So needles contribution is 7,000 less fixed costs. Remember, fixed costs 18,000. Now you might be thinking, why am I allocating full fixed costs of 3 products to needles only? Remember the definition of fixed cost. Fixed costs are incurred in total. We don't incur fixed costs for nums, needles and pins. We incur fixed cost as a total lump sum money. So if we are only selling needles at the moment, our fixed cost in total $18,000 will stay the same. There will be no change in total fixed cost. Okay, so if for the first month we are only selling needles, we still have to pay the same rent, same insurances, okay, etc. So 7 minus 18, there will be a loss actually arising from needles, 11,000. Okay, then we will add contribution from pins, which is the second ranking product. Okay, and contribution, I just need to pull out, here is the contribution, 8 times 3, 24,000. and here is the profit. Okay, so 11 is loss plus 24,000 makes up 13,000, and then we will add contribution from nums, okay, which is, you can see here, 6 into 2, 12,000. And here comes to cumulative profits. $25,000. You see, our total profits still remain the same, 25,000, but it is rearranged the way we will sell the products. It will be earned in this way. Once we would have sold needles, we would be having a loss of 11,000. After we will add second product nums, and then company would have generated the profit of 13,000. And once the third product would be successfully sold, our total profits will be at the same original level, 25,000. So these three profits we need to show on the profit volume charts as well. Okay, 11, 13 and 25. Is that okay? Now let's draw the profit volume chart very quickly. Both requirements 1 and 2, one by one. So here is the y-axis, and somewhere halfway through I can develop the x. Okay, right. First of all, the labels. Okay, here is 0, and above 0 is some profit in dollars, and below 0 is loss, of course, in dollars. Okay, x-axis is defined as sales or revenue at break even. Okay, first of all, let's do the scale. Okay, for example, 5,000, 10, 15, 20, 25. If my scale is 5,000, okay, and down there should be same as well. Okay, 5,000, 10, 15, 20. Okay, and my sales revenue at break even, maximum sales are 73,000. So what if my here is 10,000, 10, 20, 30, 40, 50, 60, 70 and 80, and here is total sales of 73,000. Okay, now let's do things one by one. First of all, easy things first. Fixed cost. Where do you want to show the fixed cost? Please go back to your break-even chart and you will find it that fixed cost lies in the loss area. Okay, so here is the fixed cost, 18,000. So 5, 10, 15, 20, approximately here will be fixed cost. Fixed cost point. Okay, then secondly, sales in cumulative, cumulative sales in ranking order, okay, which I was talking about before. Okay, 9,000. So here is 10, just before 10 is 9,000, and I can mention this is coming from pins, P. Okay, then second sales are 12 into 3,000, which is 36,000. So if from 9,000 I need to add 36,000, Okay, it becomes, I think, 45. 9 plus 36, 45,000. So 10, 20, 30, 40, and in the middle between 40 to 50 is 45,000. And second is, sorry, first one was not pins, first one was needles, and here is the pins. And last, we don't need to show anything, last product makes up 73,000, which is nums. So here I can show NU, which is nums. Okay, and here you can show N equals to needles, P is pins, and NU is nums. Okay, so that examiner knows what does it mean by P and N or anything else, any other abbreviated expressions. Afterwards, you need to slot break-even point. Remember, break-even point was 30,000 something, okay? Just need to go in here. Yes, 30,560. So 10, 20, 30, somewhere approximately here is break even. Okay, and now you need to slot in cumulative profits right at the end, cumulative profits or losses, right, which you can see here. Number one, 11,000, and this is a loss, and loss is 5, 10, and approximately here is 11,000. Okay, and that's coming from needles. Okay, afterwards, second is a profit, 13,000. So 5, 10, and here is 15. So approximately here is 13,000. And that's coming from pins. And here is 25 total profit, okay, and that's coming from NU or needles. Now, once you have done this, now let's draw the lines. First of all, when all products are sold together, here is the line for all products. You will start a straight line from the fixed cost point, and you will cross the break even, okay, intersecting the break even, you will take it all the way, okay, but your line cannot go beyond this point, okay. Reason being, your sales, let's say if you have drawn slightly longer, okay, not to worry too much, okay, not to worry too much. If you have drawn slightly longer, you can just put a little intersection here that this can't go beyond this point, okay. You don't need to draw these dots, just little cut here, and that will be fine. Now, this straight line doesn't tell me where are nums, where are pins, where are needles. We sold all three products one by one. Customer was coming for one, and we were selling whatever customer was demanding, but we were offering all three products together, and all three products together generated a total profit of $25,000. Now, without even a graph, you can see it is very much reasonable, okay, maybe 99.9% accurate, okay, if not 100%. Secondly, this straight line doesn't tell us, this part one, this doesn't tell us where are nums, where are needles, okay, they all merge together. On a few hours we were selling something, in few hours we were selling something else, okay, that's the reality. Second is, if we sell products in order of ranking, then idea is simply this. What we do is, we need to create the slopes or gradients of each product. And what is the best way? We actually match these alphabets. Here is the first N, and here is the second N. We need to draw a line which should reflect both sales of N or needles and loss from needles as well. So what I do actually is this little trick. You can see from the sales line where the sales point is, x-axis, I cut it through with a straight line, okay, and wherever is the profit or loss, which is on the y-axis, okay, I cut it through with a horizontal line. So x-axis, wherever the points are, okay, wherever the points are. For example, please look at P. Here is the point for P. X-axis, I cut it through with a vertical line, and here is the P. Y-axis, I cut it through with the horizontal line. Okay, here is the third one. But make sure you do it with lead pencils, not with the proper pens. So you can remove these lines afterwards, or you don't need to draw the full lines. You can just show little cuts, okay, showing the gradient of sales and showing the gradients of profits. Okay, so what I do is this. Let me do it one by one. Okay, here is the representation of sales from needles, and here is the representation of loss coming from needles. Now wherever two lines match with each other, we need to get just this common point. Then these lines I can remove, and here is from the fixed cost. I can start a point. Okay, if I show you with a different color, this tells me product N. Okay, because N was very small product, it has very small line. Now let's do this second product. Here is 45 from the pins, and here is $13,000 profit from the pins. And wherever two lines meet with each other, this common point, we can remove the other ones, and here is representation of pins. Okay, which is P. And now I am showing the third product, okay, which is nums, which is not difficult at all. All I need to do is where pins have finished, I just need to extend it to the end. Okay, now that represents what happens if we sell products in order of ranking, meaning a number of things you might have noticed. First of all, let's look at their gradients or slopes. Did you see the slopes of each product? Okay, this is the slope of N, then that's the slope of P, and that's the slope of nums. Okay, please have a look at, observe. Did you see that the gradient of N is sharpest one? Okay, gradient of N is like this, that if we were extending this N was going like this. Okay, but soon as we added P, the line has tilted downwards. Line has tilted downwards. Okay, and not the end. Soon as this blue line was supposed to go this way, but soon as we added nums, again a tilting downwards trend. And that tells us needles had the highest contribution generating potential, P had slightly lower, and nums had the lowest one. Okay, first is you can see which product is more profitable than the other. So what management can get from here, management can start allocating more resources to needles, and sales teams should start looking for more customers for needles than the nums or pins. Okay, so more production for needles, and sales or marketing people start looking for more clients for needles, so that let's produce and sell product which brings more money. Secondly, did you notice a shift in break even? Original break even point was here, and now the break even point is here. So if we sell the products in ranking order, it decreases the risk. We reach to the survival point way earlier than before. Okay, so it was quite technical. My advice is read the study material, book and notes, then watch this session again a couple of times. Okay, it's only an hour or so, and then you should do this question one more time. Once you've done this, then try the practice or revision kit questions. Okay, so hopefully everything will be fine. You just need to give us the feedback any problem arises. Okay, so hopefully you must have enjoyed this very, very technical area of the syllabus. Okay, take care, all the very best. Goodbye.